Good morning. It is Sunday, November 10th, 2024. It's 11 a.m. on the East Coast. This is Robert Sin at CEO Technician on X, at Goldfinger on CEO.ca, and this is Goldfinger Capital. We're going to be talking gold standard, Trump. Is Trump bearish for gold? Some Trump trade ideas. Ooh, chart review. And tax law silly season in junior. We're going to go through a bunch of charts, as you can see up there. These are the charts that are at the forefront of my mind. Some stocks that I own or are on my radar for trade setups. As always, if you enjoy these videos, if you like my content, please hit the like button on this video, subscribe to my YouTube channel, and also to Substack at Goldfinger Capital. And don't be afraid to share. Sharing is caring. It's a beautiful day here in South Florida. I hope you're having a lovely weekend. And don't forget to get outside, get some exercise, some fresh air. Maybe even go to a yoga class. Just calm your mind and improve your health. You know, at the end of the day, health is wealth, and it is all we really do have. So the gold standard, a new gold standard? What? Well, I'm not sure if we're really going to have a new gold standard, but this article from Jan Nieuwenhuis, I think he's Dutch, maybe Belgian. But anyway, he's from somewhere over there in Europe. And he's very good covering the gold sector. And this is a very thought-provoking piece he put up just on Friday. Europe is finalizing preparations for a gold standard. Worth reading. I'm not going to read the whole article to you, but basically the gist of it is that countries that are in Europe but not in the euro are accumulating gold. Countries like Poland and Hungary are accumulating gold gradually and getting it up to 4% of their GDP. And this is happening across Europe as sort of a preparation for a new gold standard, maybe potentially the end of the euro, or it's unclear. Right, but it's a foundation of a new monetary, system, I guess, a new world order, and we're seeing accumulation of gold by China, by Saudi Arabia, right? Basically, by everybody except for like the U.S. and Canada and most European countries, like the U.K. But the European countries that are sort of on the emerging side of things, like Poland, like Serbia, they are accumulating gold. And so he's got a lot of data in here, and I think it makes a lot of sense. And it makes sense that more European countries are going to be accumulating gold over the coming years to get it up to 4% of their GDP. It's very interesting. So gold is being perceived by many central banks as a key piece of the foundation of a new monetary world order. Call it the big reset or whatever. Doesn't mean it's happening tomorrow, but they're setting the foundation for what's to come. It could come a year from now. It could come 5 years from now. We don't know. We don't know exactly how it will look, but we know that gold is an important part of that new debt reset. And this is the gold chart in euro terms. And what stands out to me is the lengthy consolidations that this chart has had in recent years. I mean, basically, from early 2022 to early 2024, it traded between 1,700 and 1,900 euros per ounce in a very tight range. Then it advanced in early 2024 from 1900 to 2300, and then proceeded to consolidate for several more months around 2200 per ounce, and just recently started a new advance, taking a week or two off, of that advance. And I wouldn't be surprised, quite frankly, I wouldn't be surprised if we see another consolidation in this 2500 to 2600 range, maybe for 6 weeks, maybe 8 weeks, maybe more. But I wouldn't be surprised to see another consolidation at a higher price range. And this is following a pattern now, a trend quite clearly for many, many years of advances followed by consolidations, followed by advances, followed by more consolidations, right? So the pattern seems to me is quite likely to continue for the foreseeable future. And then gold in dollar terms came back to the 50-day moving average. 2660 is the 50% retracement of the 2520 to 2800 advance that we saw from here early September to at the end of October. So we came back to that 2660 level, which also aligns with the 50-day moving average. Bounced on Thursday, bounced pretty nicely. Normally, the way these things play out, like after you have a big down day like last Wednesday, you get a bounce, you get a little bit of a retest of the low of the drop, the big smackdown from 2800 to 2650. We might retest 2650, or it will put in place a higher low at some point in this coming week, and then the uptrend will reassert itself. Positive seasonality here into year end. I do not I asked the question, is Trump bearish for gold? The perception on Wednesday was clearly that Trump is bullish for the dollar. Trump is bullish for the stock market in the U.S. Trump is bullish for Tesla shares. Trump is bullish for a lot of things. He's bullish for Bitcoin. But I guess with the prospects of a perceived stronger economy with Trump at the helm, again, this is all sentiment right now. It's not based upon any real facts. It's just a sentiment trade. Higher growth, higher inflation potentially means higher interest rates, stronger dollar, bearish for gold. I mean, that was the knee-jerk response on Wednesday, and it makes some sense. But I think when you really delve into it, when you really think about it more deeply, well, first of all, Trump is not an unknown, at all. He's not an unknown politician or actor. He was president for 4 years. We know a lot about Donald Trump. We know a lot about his policies and his thinking. We know a lot about the results of his 4-year term, including the fact that the deficits were out of control at the end of his term, 2019 and 2020. They rose spectacularly. We also know that under his administration, yes, gold didn't do great in 2017 and 2018. It's kind of stuck in the mud during those years. But 2019 and 2020 were fantastic years for gold and for the gold mining sector, quite frankly. Now, obviously, it's not all about him, but I don't think that we can assert with any real confidence that Trump is bearish for gold in any way, shape, or form. I think that all the structural factors that have contributed to the gold bull market, the rise from 1625 to 2800 over the last couple of years, are still very much in place. In fact, they're gaining even more strength. And then this whole idea that somehow the Republicans gaining power in Washington, they're going to trim the deficits. No, it's possible. It's possible. But the Republicans like pork just as much as the Democrats, right? And so the idea that they're going to cut, all these Trump tax cuts are going to come about and they're going to cut the same amount of spending in the federal government, I'll believe it when I see it. Okay? I mean, it's one thing to talk. There's lots of talk. Politicians are good at talk. whatever you think about Trump, he is a politician. He is a politician, and he talks a lot. Okay? So do all the Republican senators and all the congressmen. They love to talk a big game, but when it comes down, when the rubber meets the road, not a whole lot of spending cuts happening. Spending cuts are not popular in either party. Nobody wants their benefits being cut. Let's cut the other guy's benefits, but that's not how you win elections. So while there may be some moderation in perhaps the rate of growth of federal government spending, I don't think we're actually going to have the federal budget decline, or at least not by a large margin. So he's got all these tax cuts he got elected on, a lot of tax cuts. Are we really gonna not tax tips? Is that really a thing? I don't know. Show me, baby. Show me. Put your money where your mouth is, right? I don't believe Trump is bearish for gold at all. In fact, I think he's super bullish for gold. That's my opinion. So I fade that move on Wednesday big time. Big time. Sell me your gold. Anyway, that's my thought. And then the whole peace deal in Ukraine. I mean, look, this is going to be complicated. I know his guys, David Sachs and Musk, want this to happen. They're going to have a DMZ. They're going to, Ukraine's going to have to agree to give up some of its territory and Crimea. I'll believe that when I see it too. It's not easy. Americans don't understand the way this conflict has actually evolved and the thinking on both sides. We really don't understand it. I can assure you of that. It's not as simple as the sound bites that they make it out to be. Okay, it's not as simple as, okay, we're going to draw a line here. Nobody crosses, this line for 800 miles. No more fighting. And, Ukraine agrees to not join NATO for 20 years. It's not that simple, guys. If Trump can make this peace deal in the first 6 months of his office, I will be very impressed. I will be very impressed. I'm skeptical. And even if they do make a peace deal, so what? So what? Well, what's it changing? What's it really changing? Anyway, let's get into the meat. The meat. Oh, and also this is interesting. I was looking back at Zoltan Pozsar, his one of his last reports for Credit Suisse in early 2023, and this bullet point here, the three types of gold, yellow, black, and white, it struck me as being very clever at the time, and it made a lot of sense. But if you look at, the oil chart since January 2023, I mean, it's down. It hasn't gone anywhere. It's been one of the worst trades of the last 2 years. It's been stuck in the mud. And even with all this supposed sanctions on Russia or, Iran, all that oil is being sold into the market. They've been selling it. China and India, they've been selling it. There's no shortage of buyers. So actually, black gold has not been a great trade. And now the knee-jerk response. And by the way, I think he should have actually had red gold in here, not white gold for EVs, red gold for AI data centers, solar power, and the building out of the power grid across the globe, copper, red gold. So I think his white gold was a mistake. Black gold, I don't know, the jury's still out, but it wasn't a great trade. The only one of the golds is the real gold. The only real gold is yellow gold, and that was the only good trade of the three since January 2023. But red gold, copper, he missed that, I believe. And all the knee-jerk response is that, yeah, here's my copper chart. And I believe copper is going to be a tremendous trade in 2025. I really feel strongly about it. I think there's a lot of FUD that Trump tariffs is going to lower the. It's going to be a headwind for the global economy. It's going to hurt China's economy further. Bearish for copper. I'm going to fade that consensus thinking. And again, I think he's got more bark than he does bite on the tariff front. I don't know. That's just my opinion. Okay, it could be wrong. I think he's got more bark than bite on the tariff front. I also think, yes, he's gonna, rescind some of the EV mandates, the green economy stuff. But remember who helped him get elected? The largest shareholder of Tesla. I don't think it's really going anywhere. Okay, I think we're still gonna buy a lot of Teslas, a lot of EVs. I think we're still generally shifting green. It just might be a little slower for the next 4 years. Copper is still a very compelling trade, mostly not due to the consumption, which is still quite strong, but the supply. The supply is just not there. Gold miners generating record cash flow. Watch this video. I think it's very important to understand just how much of a cash cow the gold mining sector is transforming into. This sector is becoming a cash cow, and it's bullish across the board for gold miners, the seniors, the mid-tiers, the juniors. We're going to see a lot of deals take place here over the next 12 months, in my opinion, and that will be positive for valuations across the sector, not just for the top of the food chain, but across the sector. When deals happen and companies get snapped up, well, that money gets recycled throughout the sector, right? And so it gets put into new names, new allocations, and it's a rising tide that lifts all boats across the sector. Obviously, the cream rises to the top, and the quality companies will do much better. Okay, so let's look at some charts. Tesla, wow. What a week. This is a $1 trillion market cap company. Why do we make the stock market so hard on ourselves? This is a $1 trillion market cap company. He won the election. His stock's up 29% in a single week. All right. I mean, it's not more complicated than that. Trump won, and Trump's biggest backer is Musk. So of course, Tesla is up 29% in a single week, adding 250 billion in market cap. Like something like that, 250 billion in market cap in a single week. So whatever he spent to win the election, 30, 40, 50 billion, it's unclear how much he actually spent in total, but the payoff is 250 billion in 3 days, right? And what a powerful breakout. So forget about the fundamentals and forget about the valuation multiples, which Tesla is trading in the stratosphere right now in terms of any valuation metric that you want to look at. It's a freaking breakout, right? So this is all sentiment driven. It's all sentiment driven. It's all about what's to come in the future, the promise of the future, what the next 4 years might bring for Musk, for America, for Tesla. It's not really grounded in fundamentals that you can see right now, but who cares? It's fantasy world, and that's a hell of a breakout. Albemarle. So if Tesla's doing well, this company should do well. ALB. So I've been pounding the table on this one for the last month. Bottoming tails. I think this sector is really overdone to the downside finally. And ALB is definitely the top name I want to own. And just forget about the fundamentals and the EV trade and all that. Just technicals. ALB does well in November. It's one of the strongest months of the year for the company or for the share price. And look at this beautiful head and shoulders bottom pattern. This is a big, fat, juicy bottom. And, you know, there's your breakout level. What is it, 105? Yeah, I don't know. 105. If the breakout happens above 105, this is targeting 125 plus. And who knows what's possible? I mean, the animal spirits are kicking up in the stock market here the last few days of last week. Could the momentum carry this up to 120 or so by the end of the year? I think it's possible, but we need this breakout to be confirmed. Big level, 105. But this is definitely one of my top ideas right now on multiple time frames. I feel like the long-term bottom is in. The shorter term is setting up for a powerful move to the upside, and seasonality is very, supportive. MindMed. Okay, so this stock is a pain in the ass. Okay, I'm just going to be honest. It's a freaking pain in the ass. It's very tricky to trade. As soon as you give up on it, it flips and turns up 30% in a few days. As soon as it's looking really good, it drops 20% in 3 days. It's a pain in the ass to trade. And sometimes it's very tricky where just when it's looking good, it turns on you and vice versa, But it also has a pattern of trending hard for a few months at a time, like November through April. I mean, it went from 250 to 12, right, in like 6 months, right? It has a pattern of trending very hard. And I mean, I don't know if there's a seasonality in the psychedelic space, but last November was a bottom, and here, look at what's happening here the last week, right? It's ripping higher, and it completed a head and shoulders bottom. So look at that bottom that was put in place from August through November in MindMed, MNMD on the Nasdaq, and it's breaking out from a well-constructed head and shoulders bottom pattern. And this is a stock that has been beaten up since April. I mean, it got more than cut in half over 6 months, and now it's rebounding hard. What are the fundamental drivers? Well, I'll let you figure it out, but they reported earnings, which they don't really have earnings. They just have, like an operating loss to report. But this is a company that has a massive amount of cash. That's a war chest, $295 million in cash. For some reason, it's one of the most heavily shorted stocks in the entire market, 37.5% short interest at last check in MindMed. It seems a bit foolish to me to be shorting heavily a company that has this much cash. Their burn rate is like 50 million or so a year. So they have they're going to be starting a phase 3 very soon. So that burn rate is going to go up a lot in 2025. But they have more than enough cash to get them through 2026. So they got at least 2 years of cash, even with the big phase 3 that's about to start for MM120. But you've got a catalyst-heavy environment here for MindMed starting now for the next couple of years. They've got several trials that are kicking off and will be underway. Phase 1, phase 2, phase 3. But the big one, obviously, is the phase 3 MM120 for anxiety, which is kicking off basically right now. And that will be ongoing throughout all of 2025. And I think the perception, like one of the reasons why this happened last week, this big move up on Wednesday, Thursday, Friday, obviously a result of the election and the incoming, health czar, Robert F. Kennedy Jr. seems to be much more favorable, have a much more favorable favorable view of the medical psychedelic sector and wanting to find new ways to generate higher levels of mental health, brain health, and sort of break free from the stranglehold that pharma has had on our mental health with benzos and what have you, stuff that is actually very unhealthy and does not lead to long-term longevity and wellness, right? So MindMed, it's a sentiment trade, just like Tesla is. It's a bit of a short squeeze, but from a technical standpoint, I wonder if the short squeeze has further to go. I wonder if it can get to 10. I mean, it should. It could get to 10 next week. We'll have to see. It's also, again, hard to trust this one. It could turn around and dive right back down to 7 very easily. So it's extremely volatile. Whenever you're trading something like this, cut your size way down. So if you would normally trade 2,500 shares of an $8 stock, with MindMed, I wouldn't trade more than 1,000. I would cut your size way down and widen out your volatility, your stops, your target levels. This thing can move very quickly both ways, and yeah, you know, it's a wild one. But I like the potential here at the end of the year, sort of part of the Trump trade, that this can get to double digits by year end. So $10 is sort of my target there on MindMed. Cybin is another one. Notice how Cybin hit the 200-day on Friday and then boom, big sell-off on heavy volume. I'm out of this one. I closed out the trade I had here. I would prefer to play it with MindMed. I think that MindMed is just a stronger stock here. You know, that could be a tighter float. It could be the fact they have got more cash. It could be the fact the short interest is so high. It just seems like MindMed has more juice. That doesn't mean I may not take another trade in Cybin, you know, if it sets up again. But for now, I'm on the sidelines in this one. Drug continues this flag pattern, this range-bound consolidation, but generally pretty bullish. I mean, you know, when a stock has a 50x move and then just trades sideways for a month, that's not a bearish thing. I wouldn't be surprised if drug has another breakout move, you know, in store for it before year end. And then getting into the gold miners. So just super laser here, because I think you guys follow this sector pretty well. You've probably heard me talk a lot about it in the past several weeks. But the GD, you know, we're all praying for a correction back in October. We're all praying, oh, give me a dip to load up more. Well, boom, be careful what you wish for. 3 weeks down in the gold mining sector since peaking on October 23rd, the day that Newmont reported its Q3 earnings. I think this is a correction to buy, and I think we are either at the end of it or we're very close to the end of it, like it will end this week, like this coming week. So either I think we reached the climax last Wednesday following the Trump win, or we'll see a final drop this coming week, and that's a dip to buy. 38 is my support in the GDX. That's a big level for me. I do not want to see 38 broken on a weekly closing basis. As long as we're above 38, especially if it can regain 40 this week. If the GDX can regain 40, close above 40 this week, I would take that as a very positive sign. And that would give a green light for the seasonal rally in the gold miners, you know, going into year end. Agnico, one of the strongest gold miners in the sector, still above its rising 50-day moving average. Keep it simple, stupid. Don't overthink it. Stick with quality. Freeport is messy. My God, did you see that rebound on Thursday? And then the drop, the pop, and then the drop. The Thursday pop, the Friday drop. What a messy chart. But keep it simple, stupid. 45. 45 is the big support level in Freeport, McMoran, FCX. So above 45, I prefer the long side. IM Gold IAG. Talked about this in my Friday video. I've been pounding the table on this on and on and on for the last year. Still think this one gets bought in the next few months. Stick with what's working, and IAG has been working in 2024, up over 120% year to date. Newmont has not been working, not at all, but I think this is an important bellwether to watch for sentiment on the sector. The big support level, I believe, is 44, where it got to on that Wednesday gap down. Let's see if it can hold 44, and let's see if it can start to gather itself and make a little rebound here over the coming weeks in Newmont. AGI, okay, this is a double top in AGI at 2150. It's about as clear of a double top as you're ever going to see. But big support at 19. And so far, with these bottoming tails on Wednesday and Thursday, the support is holding. Let's watch all these key levels and all these important miners to see if the support levels hold. The longer the support levels hold, the more bullish I get and the more optimistic that I believe the correction is over. Double tops are made to be broken. So just because it's a double top doesn't mean it's the all-time high. It's going to be the top forever. Double tops are made to be broken, especially when the chart is going from the lower left to the upper right. Core mining, notice the strength that this one had on Thursday and Friday. What a capitulation on Wednesday morning. I mean, the level of capitulation that we saw on Wednesday morning across the miners was really quite incredible to see. Some amazing buying opportunities in core at 550. 550. It closed the week at 659, up more than $1 off of Wednesday morning's low. That's a big move, guys. That's like almost 20%, right? I think this got way overdone to the downside on Wednesday morning. Kinross, same thing. Tuesday after the bell, they reported one of the best quarterly reports in the history of the company, including record free cash flow, and it gapped down 8%. It gapped down 8% because gold was down big on Wednesday morning, and everybody panicked out of the miners. Oh, Trump is somehow going to be bearish for gold. I don't understand why, but I'm a lemming, so I'm just going to sell because it's down, and that's what I'm supposed to do because CNBC told me gold is dropping, so I should sell all my miners. It was a capitulation on Wednesday morning. Well, that was a buying opportunity, and for people like me, I bought hand over fist. I actually got Kinross at 920. The low was 919. I actually literally bought within a penny of the low. Sometimes and oftentimes it's better to be lucky than good, and that was an example of one of those times on Wednesday morning in Kinross. Oil services. So I've mentioned this trade to a handful of people in the last couple of days. I said, "Oh, Robert, it's oil services again. It's a horrible sector. Look at the chart. It's just dead money, and Trump is going to be bearish for oil. The price of oil is going to drop under $40 because Trump is going to drill and make peace with the Saudis, and there's going to be flooding the market with oil." What? It doesn't make sense. The Saudis don't want to flood the market with oil. They don't want to knock the oil price down further than it already is. A lot of their economy and their government budget, relies on $70 price of crude. They're not going to knock it down any further, period. And oil services, drill baby drill, isn't that what oil service sector wants? Isn't that what they want? They want more spending, more drilling in the oil sector. That's what oil services companies do, right? So yeah, I'm not saying to buy every stock in the oil sector. That's not my point. But oil services, Halliburton, Schlumberger, these kind of companies should do very well under Trump 2.0, quite frankly. Also, the fact that everyone is so quick to tell me why I should be bearish on oil, not bullish, well, that tells me what the sentiment is. This is one of the most hated sectors of the entire market. I don't know anybody who talks about Schlumberger. I think I'm the only one who does because it's freaking boring. and the chart has gone nowhere, right? But that's the past, right? That's the past. So this is the thing that makes somebody a great investor or a good trader. Obviously, the trading time frame is much shorter than the investing time frame, but you sort of need to have a very similar thought process in both areas, because oftentimes the conventional thinking is wrong, right? It's wrong. It's not where the alpha is. It's just saying and parroting what everybody else is saying. Drill baby drill is bearish for oil. Trump is going to be bearish for oil. That's the conventional thinking. I don't think that is where the alpha is. I think there's a lot of negativity already priced into oil, priced into the oil stocks. The valuation multiples of this sector are about as low as any sector in the entire stock market. I don't know anybody who's really bullish on a stock like Schlumberger, except for me. And I like it for a trade. Not married to it. And frankly, with OIH, I really want to see the breakout above this blue line, this 307 level. I want to see that in the next 2 to 3 weeks, right? If this just is not working, if it's just stuck in the mud around 290, it's not going anywhere, it'll eventually wear me out and I'll just dump it and say, okay, I was wrong. But if it gets above 307 and it's working, if we get some momentum on our side, I'm going to be a happy boy. And this could absolutely generate a 10% rally across the sector by year end. Absolutely possible. That wouldn't be too big of a call. It's currently, the OIH is down, year to date. So it wouldn't be that big a deal for it to flip in the green up 5%, for the year or something. And I would be very pleased with that, right? So, yeah, that's my little trade on OIH and Schlumberger. I don't have like huge targets on these things because they're just not that volatile, right? They're only going to move so much. But could Schlumberger get up to 46 or 47 in the next couple months? Sure, totally possible, right? And obviously, if it breaks back under 40, I'm wrong. It's as simple as that. Juniors. So we're entering tax law silly season. I'm not going to focus on that in this video. That's something for probably 2 weeks from now, 2 or maybe even 3 weeks from now. But it's something we want to start thinking about. But first, I'm going to go through some stocks that are working. AE, which is, American Eagle Gold. AE on the TSX Venture is working in a big way since early September. The last 2 months, AE is up over 100%. I'll be speaking with the CEO tomorrow at 1 p.m. Eastern on X basis, so tune in for that one. Suddenly, a lot of optimism about this copper north zone at the Nat Copper Gold Project in the Babine region of BC. But just purely from a chart standpoint, I'm not going into the whole drill program and expectations and all that. That's a conversation for another day, maybe a conversation for tomorrow, but the chart is breaking out. And I love how this had its big sell-off in late August. It bottomed, turned up, then consolidated for several weeks, and then began to break out again. And all the people that say, oh, there's a gap at 55 cents, it's got to fill. And there's a gap at 65 cents, it's got to fill. Well, no, it doesn't. It doesn't. Most of the time they do, just as a sheer byproduct of the volatility of the sector, right? These stocks move around 30, 40% all the time. So yeah, it tends to hit all the price points, so the gaps fill, but it's the ones where the gaps don't fill that you should really be paying careful attention to, because those could be called breakaway gaps. So this was a breakaway gap, and then this was a breakaway gap, and it consolidated in this little island pattern, very tight chop around 70 cents for a week or so, and then Friday it proceeded to make another new high, in fact, an all-time high. First Atlantic Nickel. So I love how this one also formed a 2-month base, 3-month base from August through October, really based around the 8 to 9 cent level. And then boom, drill program underway. We get an update from the company, and drilling is still in progress. Yeah, and so we're going to have a lot of news flow from FAN over the coming weeks and months because they've been doing a lot of drilling. So, I love the fact that this one is in a hated metal, very hated metal, and it's going against the tide. It's going up. It's breaking out. Regulus. So this is copper in Peru. Again, not going to talk about fundamentals here, but just the chart. They've got a lot of copper. They got a lot of copper on the ground, so that checks a box. They got billions and billions of pounds of copper there. And look at the chart. It's as bullish as it gets, really. Tremendous 2024. And then this lengthy multi-month consolidation probably bored a lot of people out. A lot of people probably sold, said, oh, it's topping. Because most juniors, when they just go sideways for many months, more often than not, that's usually right before they roll over, right? But the quality ones don't roll over. They actually then go on another leg higher and make new highs. And that's what I feel like. Again, I'm not talking fundamentals, although I could talk fundamentals. That's not the point of this conversation here. Technicals only. This is bullish, and I think odds favor another leg higher for Regulus, REG, on the TSX Venture. Hercules Metals, big.V, not a great year for Hercules. 2023 was a great year. 2024 has been a challenging year. High expectations at the start of the year, very high expectations, set the bar very high, right? But the thing is, drilling still going on. Will probably be going on for another couple weeks, I would guess. We're going to get results for the next several months, and then they'll be back out there again in the spring and drilling the piss out of this thing throughout all of 2025, right? So the story is far from over, even though this has been a minus 60% year for big.V. The story is far from over, right? We're just still early in the book. There's many more chapters to be written, but from a technical standpoint, this 50-cent level is a big level, right? This is a big support level. Which way does it break? Right now, the stock just doesn't have much energy, right? The volume is pretty thin. It's been thinning out for months. Doesn't have much energy. Needs an energy boost. It needs a power drink to recharge it and get it moving back up again. We'll see if that happens, or if it just breaks that support and fills the gap. Oh no. Hey, I'm throwing out possibilities here, not making predictions. In the junior mining sector and markets more broadly, you have to think that anything is possible. It could go to $1. It could go to 25 cents, right? It's all possible, and you need to figure out where the probable lies, right? But obviously, a lot for Hercules is going to hinge on the drill results that will be coming out and sentiment around where this porphyry project in Idaho is at. Is it of the potential that everybody thought it was last November when Barrick cut that big check to take a 15% stake in the company, right? And that's really the assessment that Mr. Market has to make, right? And again, I'm not really getting into the fundamentals in this video. I'm just talking big picture stuff. And then, so tax loss season, right? So the next month is really the heart of tax loss silly season. It's really an opportunity for you to find those hidden gems, those beaten down, oversold stocks that people have been tossing out just to get those tax losses to reduce their overall end of year tax liability, because they don't think anything's going to really change for a few months. So I can sell it now, I can cut my tax bill down, and if I feel like buying it back in January or February, well, I can do that, right? And so that's basically the thinking. It's not any, deeper than that. But you want to really be looking for companies that may have been unfairly, and I use that in quotes, sold off to deeply oversold levels. But really, the big picture, longer term story is still intact, right? All hope is not lost. And perhaps the changing of a calendar year from 2024 to 2025 and the possibility that sentiment could turn more favorably in the new year could give a real trading opportunity, right? So those are the kind of stocks you want to be looking for. I've been putting together my list. It's a little harder, this year. There's not quite as many of these beaten down ones, but one that I do want to highlight was from last year, was Bay. So remember, Bay in 2023 had this incredible parabolic advance in August. It went from 3 cents to more than 30 cents. So it was a 10x in a very short period of time. A lot of optimism, new discovery, chalcocite. And then the drill results just didn't measure up, right? There was a lot of optimism and the drill results just didn't quite measure up. So then by the end of November, it had bled all the way back down to 5.5 cents, right? So it was at 34, dropped all the way to 5. Everybody gave up on the damn thing. And that was a tremendous tax loss, silly season opportunity to buy Bay at 5 or 6 cents here at the end of 2023, because really the story was not over, right? It was just one bump in the road. It was one chapter in the process of exploring this big Somerset Island copper project. And the fact that they have a free carried, ride on this thing where they don't have to pay for all the drilling and all the work, it was actually a tremendous trading opportunity, because you knew that there would be optimism that would come back in come March or April as we got closer to another season of drilling, and the stock would probably trade back up to 15 cents or so. And who knows, maybe they'd make another, they hit another incredible hole filled with chalcocite, and maybe we could go back to 34 cents in 2024. Well, as it turned out, the stock has been pretty range bound. It hasn't had any real spikes, but if you got in at 6 cents, you certainly had an opportunity to sell it at 14 or 15 at various points in 2024, right? So this was a classic tax loss buying opportunity in Bay last November. It was on my list. It was one of 6 stocks on my list, and it yielded 150% gain for those who wanted to take advantage of that were able to get in at 6 cents and able to sell it at 15. You could have made 150% gain in Bay. And so those are the kind of setups that we want to be looking for over the next month. And again, I'll have a video solely on tax loss silly season and outlining some of my picks in the next few weeks. Thanks for tuning in to this video, and I hope you have a powerful trading week.